I am here in Bali still, and it's 2 more days until I need to go back to the United States. I do look forward to it, but I am here enjoying my life right now while crypto is really very active. And I was actually here for a mastermind where I was basically taking intentions and setting goals for the next year. And one of my goals are that I want to impact a lot more people to learn how to be invested in crypto. I'm not necessarily talking about heavy trading where you need to be glued to the screen like I am, but I'm talking about those people who see that Bitcoin is something very powerful, not to neglect anymore, and they want to just be part of the movement, maybe even with just a very small allocation. One of the misconceptions, by the way, that a lot of people who are not really savvy in Bitcoin have is that they think that you need to buy an entire Bitcoin. And that is wrong. You can purchase any amount of Bitcoin, even just $1, $2, $3, $2, whatever. If you want to be part of that course that I'm releasing and be the first to know, then you just go to crypto.lifestyle and I have a wait list that is currently open. All right, let's go into what kind of text I received yesterday. I actually received a text yesterday and I want to show you what the text was. So essentially, this was the text, and I was talking to a friend who also happened to be here in Bali, and I told her, listen, if you want to invest now and you are not a trader but a long term investor, just take your capital and split it up in thirds and buy one third Bitcoin, one third Ethereum, and one third Solana. I personally believe that if you do, you have a nice exposure to the entire crypto market until the height of the bull run. Now, as you can see, she texted me this morning and she was a little bit worried. Oh no, I should have bought later because now Bitcoin is at 99,000. That was, of course, this morning. At the time of this video, we are back at 101,000. So here's something that is very important to understand when you start investing in crypto. The movements are much more radical and volatile. 5% drop, or sometimes depending on what crypto you trade, 20%, 30% drop in one day is not uncommon. It is normal, and we actually love that about crypto because it allows us to trade and have good entries and exits. So the question, of course, that most of you have is, was the friend right? Should she have bought a little bit later? Again, it all depends on what is your horizon that you want to be invested in. Most people, in my opinion, are not professional traders, nor should they aim to be so, because it takes a lot of time and you need to have a mentor, you need to have guidance. But I do agree that most people should partake in this movement and be invested. Own some Bitcoin, own some Ethereum, whatever is healthy for you. Most financial experts say that about 2% of your investment portfolio can be in crypto, being a high risk class. So the question is, the money that my friend invested yesterday, is that likely to grow or not? And that is essentially what this video is about. Just in case you are in that same position, you have some cash and you hear about all of this movement and you want to invest a little bit and you're asking yourself, is it too late? The short answer is, it's probably too late if you have a short time frame, a short investment horizon, because we are in the final stage of the bull run. But if you are a long-term investor who sees that Bitcoin can be an allocation that you make now and then in 5, 10, 15 years, or whenever you tap into it, maybe for retirement purposes, if you're in that situation, then it's definitely not too late. Now, let's see why there was this drop that happened yesterday. So the reason why there was this drop is because there was an important event that happened, and essentially the Fed announced whether they would cut the interest rates or not. Everyone was expecting the interest rates to be cut by 0.25%, which did indeed happen. But leading up to that event, investors, they get unsure and they are like, everybody says there should be a cut, but I'm not sure. So maybe let me sell some of my Bitcoin so that I'm safe. In other words, the market never likes when there's insecurity, when there's unknowingness. So whenever there is safety and people feel that they know where we are headed, then people are in the market. And when they feel I'm not so sure what's going on, then they draw back. So that's normal, right? That's what you would do too. So that means that very often when we lead up to those important announcements in the macro economy, we often see a very slight pullback. And then as soon as the news is out and it is positive, typically we see a positive reaction, right? So here's something very important to learn. There are a lot of repetitive events in the world of investing and in the macro economy, and you need to learn how to deal with those events. Now, the best way to go about it is to look at the macroeconomic situation. We are currently in a bull run. We have a very pro crypto future president elect, and we definitely have history to look at. And that is always the most powerful thing you can do. You look at similar events in the past, and then you make an educated guess based on what happened in the past in those instances. I think that this should happen again. Luckily, there is a chart that we're going to look at here, and that is the following. Let me bring this up. So this is a chart that basically the vertical lines here mark the dates where the Federal Reserve Bank was due to announce whether they would cut or increase rates. So, of course, we are interested in those instances where the rates were indeed cut, because we want to see how did the market react in the past. So what you see here is how Bitcoin reacted in the past in those instances. So that is really interesting to look at that. So let's take a look at this together. On September 18th, we had a 50 basis point rate cut. And what you can see, this is, by the way, a daily time frame, meaning each candle here represents a day. In the time leading up to the announcement, we have an overall negative 5%. So the market goes down because it is unsure about what happens. Then the news comes out. We have a 50 basis points cut. And generally speaking, when we have a cut for interest rates, that means that there's going to be cheaper loans. And when there's cheaper loans, there's more money in the market and in the economy. And when people have more money available, they're more open to high risk investments. Bitcoin and crypto in general being considered a high risk investment, people will say, okay, I have enough money to take some of it and allocate to crypto. So what we saw was this 5% drop in the 5 days leading up to the announcement. Then we learned we have a 50 basis point cut, and we continued the bull run at that point. We climbed up again. As you can see, the following day, actually after the announcement, the price of Bitcoin was already higher than the day before the announcement. Let's go to the next date, which was November 7th. So here, what we had was a 25 basis points cut, and that was the same amount as we saw yesterday. So what happened in the days leading up to the announcement? The market went down 9%, and then The following day, it recovered very nicely, and we saw this huge increase in Bitcoin. So here we are now. Obviously, this chart does not represent the current state of things, but it shows what happened essentially in the few days leading up to the announcement. We have a negative 5%. And so what happened? We all found out that the Fed did indeed say we're going to cut 25 basis points again. And let's look at what happened. So here's a chart that represents Bitcoin, and we look at a daily time frame. Okay, so here we have Wednesday the 18th, and you can see that was this like time leading up to the announcement. And what kind of drop did we see here? If we look at this drop, we had about that's a 5% drop. So if we compare that to the previous announcement, very similar, right? This one here, 5%. So nothing out of the ordinary. That is essentially the takeaway. Now, if we follow the trajectory of how the past has behaved, then that would mean that today, what's today? Thursday, the 19th, the US is about to wake up. It's 9 o'clock Eastern time right now. So today, there is a very high likelihood that Bitcoin will close higher, or at least at the same level than it was yesterday. Again, why am I saying this? Saying this because that's what happened in the past. Okay, 5% down, following day recovery, 9% down, following day huge recovery. Now, is this set in stone that this is going to happen this time? No, of course not. All of these things are only indicators, and they're a little bit to be taken like a weather report, right? It's very likely that it will happen, but nobody can guarantee us that it will happen. However, if we zoom in and we look at the 4-hour behavior, here was the downtrend, and now we are in an uptrend, going up to that blue line again, where we follow, that was the trend line here, that Bitcoin's price followed actually since Wednesday, November 13th. Based on that indicator, we are to expect that Bitcoin will recover, and then it'll be back around 106,000 and even higher. And that would make my friend very happy, right? Now, there's always multiple indicators you want to look at. So one data point is not enough. You always want to look at as many as possible data points, really. But in this case, we're going to look at three today, four actually, four. The first one was past behavior. The second one is something that is here at the bottom, which is the stock RSI. And I'm definitely not going to give you a technical analysis explanation here of what this is, but in layman's terms, it means that if these lines here, the blue line and the red line, if they are high, above 80%, then it means that this asset is overbought. Okay, so it means that you need to slow down a little bit. If it is down here under 20%, it means that the asset is oversold. So you want to use that almost like a speedometer to know, am I going too fast or am I going too slow? Okay, so we went a little bit too fast here. Prices dropped, and of course, as price drops, we're getting in healthier environment here again for the stock RSI. And that's a good sign, because that means there's breathing space in the market now. The asset is not overbought and not oversold, and we can continue our rally upwards. So that's essentially another indicator to let us know, okay, are we expecting this to continue to rise, or is it going to drop drastically? So that's the second data point. We look at the RSI. I think it stands for Relative Strength Index. Don't mark my word for it, though. I just know that it is an indicator to look at. The next data point that we want to look at is the liquidation heat map. Again, very technical stuff, but essentially where you see the yellow, that's when it's above the price. You have a lot of investors betting against coin breaking through this barrier. And when you see green under the price, you have a lot of investors thinking it won't go below that. Okay, that's all I'm going to say here. Now, here again, we see this was leading up to the Fed's announcement. Price goes down. So there's definitely people here who got liquidated with their leverage. And then we're going up again. These upper boundary is eaten up here. And that's a good sign because now we have a free movement to the upside. So that would be the third indicator I'm looking at. And the next one I'm looking at is the total market cap of all the crypto assets combined. Every coin, Bitcoin, Ethereum, everything combined. So you can see that again, I don't expect you to know this because it's a technical analysis geeky thing. But what we are seeing here is a cup, and then there's a handle, and then there's this like breakout. Okay, so whenever we see cup and handle patterns, it's an indication that is bullish. And when we say bullish, we mean very favorable. Okay, so in the way you want to read this is you want to find where is the horizontal, almost like you put a lid on the cup, and then you take a vertical and you go to the from the neckline, it's called the neckline, to the lowest point of the cup. So that would be here. Okay, and theory says that if you have this cup and handle pattern, then in the upwards movement the price goes up to the equivalent of the depth of the cup. So if we put that around here at the neckline again, we see that would take us to about 4.15 trillion. So that is another 11% up. And what that means is that there is juice. There's still juice in the market to go even higher. And maybe when we have reached the 4.15 trillion, that means the end of the bull run. That could be possible. But of course, I can't foresee the future. I just given you a bunch of indicators that help us believe, should I be in the market here in cryptos, or should I get out? Am I early or am I late? And again, everything happens to revolve around your investment horizon. So that's that. This was my first video ever that was of this like technical nature, where I showed you these things. And unfortunately, you cannot completely avoid it. But one thing that I'm really trying to do is also put out information for people who don't want to know and understand all of this. They don't have the time for that. I have a passion for just teaching and showing people how to participate in the safest way possible by dollar cost averaging into Bitcoin. And I'm creating a course around that that is going to be as beginner friendly as possible. And if you want to be on the first ones to know about that course, all I need you to do is it's here, go to crypto.lifestyle and sign up. Yeah, so let me know if you like this new format. What could I have done better? What was helpful? And I'll see you again very soon here on this platform.